It's Wednesday, March 23rd, 2022. Markets across the board down today. Dow Jones down 450 points. Oil around $115 a barrel. And I was just reading this article today on CNBC talking about oil prices and the markets being down today. And they're saying that it's the talk of inflation that is responsible for markets being down today. Now, if inflation was responsible for the markets being down, then the markets would be down every day. So it was very interesting today to see markets across the board down. Gold way up, about $25 as I make this video. Silver way up. Oil way up. So what is happening? I think it's more than the talk of inflation. I think it's more than the uncertainty in Eastern Europe. I think a lot of this is the Fed raising rates a possible 50 basis points in May and another hike in June. And they're saying maybe 50 more basis points in June. I don't know, but I do believe we are seeing at least a 60% chance that we will see a 50 basis point hike in May. We're going to see another hike in June. Don't know exactly what that one's going to be. But I think these markets are beginning to realize that the Fed is raising rates. And I know that there are people out there that still don't believe that, told you and I that the Fed wasn't going to raise rates, even though they just did. And now they're fighting the Fed. It's amazing. They say don't fight the Fed, but as soon as the Fed begins to raise rates, they're going to try and fight the Fed. And now they're going to say that the Fed's not going to raise rates. They are raising rates, ladies and gentlemen. And everybody believes, and it's very possible, that they're going to do a complete 180 and reverse course after a couple rate hikes. Very, very possible. But they have to realize if they do that, they are going to send a very, very dangerous message to the American people, to the world. And the U.S. currency is going to be in very, very big trouble if they reverse course. You're going to see quite possibly hyperinflation kick in at that point. If you think inflation is bad right now, all the Fed has to do is raise rates a little bit more and then reverse course, and you're going to see very, very big trouble, inflation trouble in America, much worse than the inflation you're seeing right now. But inflation's still here. The Fed is still buying mortgage-backed securities, treasuries, expanding the balance sheet. So we're going to see what transpires this coming May, June, and throughout the year. But we've got other problems, and one of these other problems is housing, house affordability. And housing affordability is about to crash. Mortgage rates rising, price of homes rising, energy costs rising, food prices rising. All this makes affordability for a home very, very difficult. Many existing homeowners feel this lock-in effect. And they're going to continue to feel locked in because why would they sell their house if they have a good rate right now on their mortgage, sell their home, and then have to pay a higher rate for a newer home? And so a lot of people are going to sit tight. They're not going to go anywhere as rates continue to increase. 30-year fix today is around 4.5%. And remember, they said we wouldn't see rates at 4.5% until the end of the year. Ladies and gentlemen, it's March. I have no doubt we're going to see mortgage rates, 30-year, over 5% this year. I don't even think that's going to be hard to do. But even at 4.5%, 5%, 5.25%, 5.5%, that's nothing. And when I'm watching these financial shows, they think, literally the world's coming to an end because a 30-year rate is 4.5%. And maybe going 5% or a little bit over, could go much higher, nobody knows. But, we don't know, we have no understanding of any normalcy, normal rates. 2.75, 2.8, 3% is not normal. This is all artificial. And these are the reasons why we have a housing bubble right now, because we've had artificially low rates, all this easy money, and of course institutional investors coming into these markets propping up this bubble. But we've got to get back to some type of normalcy and putting real rates back into these markets, back into the housing market. And at some point, we're going to see prices coming down. BlackRock, for instance, gets all this free money along with other institutional investors. You look at companies like Zillow investing in the housing market. So you have these, multi-billion-dollar hedge funds and companies and institutional investors coming in. Question, what happens when the buyers disappear and you have these companies and institutional investors holding millions of homes? If they start dumping the homes quickly and start flooding the market, buyers are going to see this and they're going to know that prices are coming down, and they're going to hold off because they're going to see a flood of inventory coming on the market, and they're going to watch prices come down. If companies and hedge funds and institutional investors hold, others are going to sell, and these same companies holding are going to lose billions of dollars. See, this whole thing, it's very, very complicated, and it's going to take a while to play out, but we're already seeing the wheels in motion, how this is all going to play out. And let's not forget that new building permits all over the country are at just incredible record numbers. And you have so much new construction taking place right now, new building permits, and you're going to have so much inventory of new homes coming on the market at the worst possible time as people are paying $6 for a gallon of gas. They're paying more at the grocery store. Just the inflation eating their wages, eating their savings account. Worst possible time. And as mortgage rates go up, so connect the dots, ladies and gentlemen. Do you think the housing market is going to be in the same place a year from now? I don't think it is. I think that we're going to see big changes coming to the housing market. We're going to see the housing debacle develop in a very, very complicated collapse, in my opinion. New home sales decline, surprising analysts. This, I believe, is on Market Watch today. New home sales decline, surprising analysts, even though the inventory of properties for sale has hit the highest level since 2008. This is all over the internet today. U.S. new home sales down 2% in February, but get this, sales were down 6% compared to last year. The supply of new homes for sale rose between January and February to a 6.3 month supply of units. In January, new home inventories were already at the highest level since 2008. Again, take a look at the amount of building permits that have been pulled throughout the United States. It's record breaking, and it's still accelerating. And while it's accelerating, there are going to be less and less buyers. And then you take into account first-time buyers, completely priced out. So at the end of the day, at some point, prices must come down. And it'll be very interesting to see how far prices come down and how fast they come down. So if you're in the market for a home, like I am, patience is a virtue, my friend. Patience is a virtue. So I'm going to sit tight for a while and just play it out and see what happens this summer. But I think that the numbers are going to be in the favor of the buyer here at some point when this thing begins to really, really correct this year. We already know that existing home sales have been down for 6-7 months. Now new home sales down. Prices still up, but hey, they can keep prices wherever they want. They can ask whatever they want until there comes a point where a builder or a existing home seller says, hey, my house isn't selling, I'm going to have to adjust the price. And there are going to be less and less buyers qualified to get a mortgage, period. You got to have a job. You got to have a history. You got to have a down payment. You got to have good credit. People are being evicted. People aren't paying college tuition debt, or they're not paying medical bills. People are behind on their automobiles. So people's credit is being destroyed. It's going to be much more difficult to find buyers, qualified buyers that have a down payment to buy these new homes or existing homes. The hedge today, Brent soars above $120. Oil will hit $150 this summer. WTI $115, about $115 as I make this video. Brent $121. You think this is going to help the housing market? You think this is going to help the economy? Do you think people are going to have as much discretionary spending when they're putting gas in their car at $6 a gallon? My buddy called me this morning, put super unleaded in his car today, $6.49. About a mile from my house, it's $6.69. Diesel, anywhere from $6.59 to $6.89 is what I'm seeing in my area. I don't know how people in these massive F-350s, these 250s, these Duramaxes, how in the world they're filling up. But my friend called me up this morning and said, I just paid $6.49, and he goes, they shut me off at $99. I couldn't even fill my car up at $99, and the pump just shuts off. So what happens when they just say, hey, you can only get $99. That's as much as you get. What happens when we begin to see restrictions on how much gas you can put in your car? What happens when we begin to see gas stations running out of gas? It doesn't matter if the price goes to $8 or $9. What happens when the gas just doesn't show up, or they go, hey, you can have $25 worth of gas? What happens when you go to the grocery store and the prices are accelerating, but there's no food? What do you do? I mean, this thing can continue to really, really spiral out of control. Bloomberg today, 1 in 3 workers earns less than $15 an hour. That on Bloomberg. Nearly 52 million people right here in the U.S., or 32% of the U.S. population, earns less than $15 an hour. Now, You take gas at $6.49 a gallon. After taxes, some people literally might have to work 2 days just to fill up their tank. And this is no exaggeration. There are people out there that may have to work 2 days to fill up their gas tank. How in the world is this economy going to survive? And to these people out there that believe that everything is okay. Somebody wrote yesterday and said that gold is worthless. And look, if you have free gold and you think it's worthless, you can send it to my P.O. box right down below in the description box. By all means, send me your gold. If you don't want it, you believe it's worthless, please send it to me as I make this video up $25, and it's going to try to run back to 2000. Is it going to go up and down, up and down? Absolutely. There's volatility. You got JP Morgan shorting the gold market, flooding the market with paper, GLD, SLV, and playing all these games. But at some point, ladies and gentlemen, the market is going to take over and they're going to lose control. And when they do, we're going to see real valuation of assets. Many of them are going to be worthless, but 2 of them that are not will be gold and silver. Gold and silver, really, it's literally like a caged tiger. And once it gets out of the cage, it is going to go ballistic, in my humble opinion. The 2 most undervalued assets on planet Earth, gold and silver, completely manipulated. And everybody's like, well, yeah, they're manipulated. Everything's manipulated. Yeah, but most things are manipulated to go up. Gold and silver have been manipulated and suppressed to stay down. When they begin to lose control, you are going to watch them skyrocket. Take a look, Google how much gold and silver JP Morgan has in their vaults. Why are central banks continuing to stockpile so much gold? Why are nations across the world stockpiling so much gold? Figure it out, because it is not worthless. To people out there that talk like that, you're completely ignorant and you have no education of history or economics or real money. And I feel sorry for you because you're ignorant. And if you knew history, and if you knew what real money was and you knew what fake money was, well, you wouldn't call this so-called barbarous relic gold worthless. Why does every central bank in the world hold it? Why are so many stockpiling it at record numbers? Why are so many nations stockpiling it? If it's so worthless, why doesn't the Bank of England give Venezuela their gold back? If it's so worthless, why doesn't the U.S. give back to Germany their gold And who knows how many other countries want their gold back that we're not giving it back to them. So for such a worthless, barbarous relic, how come we don't give it back? How come the Bank of England doesn't give it back? And how come everybody wants it? So next article, used car prices fall as Goldman points out supply chain alleviation. So now they're saying that they're beginning to get chips, and we're seeing more used cars hit the lots. And my question to all of you is, please comment down below. At some point, hopefully, prayerfully, this whole thing gets worked out and we get chips, and those thousands upon thousands, the sea of cars and SUVs in Detroit and other parts of the country get chips, and they can get these cars delivered to the dealers. But then when people aren't working, when 32% of this nation in the working force makes less than $15 an hour, and inflation is eating everything up that they have, and you have gas prices at record highs, who's going to buy these cars? What happens? And so this is, I think, what we're going to see. We're going to see a flood of automobiles come back. Don't know, not saying that's going to happen tomorrow or next week or next month, but eventually it's very possible that there's going to be so many cars on these auto lots that they're not going to know what to do with them. And we're going to come to a point where there's so much housing inventory, they're not going to know what to do with it. And what does this mean? It means prices are coming down. Let me know your thoughts. Are we going to see that? Are we going to see a mass flood of automobiles and houses hitting the market, pushing prices down? But then who's buying them? Who will buy the cars? Who will buy the houses when people aren't making wages, when the wages they are making are getting devoured by inflation? If you buy a new car, can you afford $6, $7, $8 gas, whatever it's going to go to? Can you even afford to put the gas in the car? Let me know your thoughts. Another article today on the hedge. Gas stations will run dry. Catastrophic scenario for diesel emerging. Now we have a diesel crisis, a diesel shortage. And this means that the cost of everything being delivered to the store, all the food being delivered to the grocery store, items delivered to Walmart, to Marshall's, to Target, to any retail, everything is going up because you need diesel to push those locomotives on the railways. You need diesel to put in those big rigs that transport everything down the highways. So I don't know how the average American is doing it right now, but look, there's more people out driving around than ever before. When do we begin to see things slow down? Comment down below. wolfstreet.com. And I want to end with this article. Very, very interesting. If you get a minute, check it out. Another office tower goes bust. Blackstone walks from Manhattan Tower it bought for $605 million. Commercial mortgage-backed security holders to eat remaining losses. Lenders are going to continue to get stuck with these buildings, office buildings, retail buildings, the shopping malls. Lenders are going to continue to get stuck with millions of vacant square footage, and your pensions, your 401ks, your investments are invested in these commercial mortgage-backed securities. And where does this lead us to? There's going to be, at some point, very, very severe consequences. And I know when I watch these financial channels in the morning, nobody talks about all this vacancy. Nobody talks about commercial mortgage-backed securities. Nobody talks about the pensions invested in these commercial mortgage-backed securities or in these major real estate development companies in Asia. Another office tower is going to cost lenders an arm and a leg, the article says. 1740 Broadway in Midtown Manhattan, 26 stories high, 621,000 square feet, bought in 2014 for $605 million. The two biggest tenants in this structure have left, and now there's literally nobody in there. Blackstone had a $605 million loan originated by Deutsche Bank, and now they have bounced, leaving the lender holding it, and all these commercial mortgage-backed security investors holding the bag. So we're going to see more of this. This has been going on for years, ladies and gentlemen, years. And how they're covering it all up, I have no idea. But at some point, it has to come to a head. We have so much commercial real estate sitting vacant, and we're now about to see this transition into the housing market. We're going to see big trouble in housing. So think about this. We're going to see commercial real estate and housing just completely imploding at the same time. What are these banks going to do? They're holding billions upon billions, maybe trillions at this point, trillions of dollars in commercial real estate and residential real estate. And when houses sit vacant, when buildings sit vacant, somebody's holding the note on all this, and somebody is going to take huge losses. Back in '08, real estate out here, no joke, no exaggeration, houses were selling for 50 cents on the dollar. Some selling for 20, 25 cents on the dollar. Lots out here. I believe D.R. Horton had a community out here, and they were selling lots at 10 cents on the dollar. So can it happen again? Yes. Will it happen again? I believe it will. Will it be as bad? Probably worse. So I'm going to leave it there today. Market volatility continues. More escalation in Eastern Europe. And all I can say is do the best that you can to prepare mentally, physically, financially, and especially spiritually. Walk close to God, ladies and gentlemen. So much happening. Anybody telling you out there that this is no big deal, that there's nothing to worry about, that the economy is doing fine or the economy is rebounding, it's recovering, they are either completely misinformed, uneducated, or straight up lying to you. 99% of the people watching this video, yes, you know exactly what's going on. And before I leave, just to let you know, you are not alone. I see exactly what you see. Read the comments down below. Thousands and thousands of people in those comments down below see exactly what you're seeing, and they are taking the same exact precautions that you are. We will continue to buy real assets. We will continue to have a safety net of cash put on the sidelines for when the sales come. We will have food, we will have water, we will have training. We are going to continue to walk close to God. These are the things that we need to be exercising every day. This is now, you have to inject this into your lifestyle. You cannot just go, oh, I'm going to buy 30 days of emergency food, I'm set, ready to go. No. This is now a lifestyle. You got to get in a mental mindset to survive this economic collapse. This thing's going to get ugly, ladies and gentlemen. And this isn't doom and gloom. This isn't to scare you. This is to reinforce with all of you that it's real. And it's going to get very, very real as we head into summer. There is no denying now what is going on. And anybody that denies what's happening is either naive, dumbed down, uneducated, or just completely lying to you. God bless. Talk with all of you soon.